and welcome to Cramer's Corner with this weekly technical update. This is an educational video. There's no advice or recommendation whatsoever intending doing this. It is purely to show you and demonstrate how I use technical analysis to read the chart, to read the movements, the trends in the financial markets. Today I will cover Novo Nordisk, I will cover Eli Lilly, they are competitors, so we will have a quick look at also Eli Lilly. I will look at Nvidia, Tesla, S&P 500, and finally gold. And I'll try to have a little bit medium-term view on it. So let's start with Novo Nordisk. As you can see here on the chart, on the left side, I do have the daily chart. So each candle here, these are called candles. They represent 1 day of trading. And currently we are trading down here. That's the green one. We opened much lower, actually opened just at 401. And that was more or less at the low point. We dipped a little bit below. Here on the right side, we have the weekly chart. When we get to the gold, then we'll be looking at a monthly chart also. But here we have a weekly chart. So yeah, Novo has lost more than 60% since its peak all-time highs last year. First, it formed this shoulder pattern. If you've seen some of my other videos, or if you're following me on in my YouTube channel, Cramer's Corner TA, then you will also have seen me talking about Novo and the shoulder. It reached the target area down here around 550, bounced a bit, back up, and then sold off again. And now we're actually below a support level here, just around 432. 432, it's testing it here at the moment, within a few pips from it. If it does close back above 432, 431.80, then I think we could see a bottom in the Novo. Otherwise, if it can't do that, there's still a risk down to next support that goes all the way back to around the 2022 sideways move here, consolidation area, all the way down to around 365. But if it can close above 432, maybe then we can find a bottom and possibly reversal. RSI, as I'm showing down here, is currently in the negative sentiment. It's below 40 threshold. Same here on the daily. There is no divergence at the moment, meaning that the RSI is supporting lower levels, but it can still bounce. Moving on to its competitor, Eli Lilly, it actually fared quite good compared to Novo at least, but it is nearing key support levels. Once again, you can see how many times it's touched levels around 725. If it does close below, well, then we have established a bearish trend that can take it even lower. And also, if the weekly RSI, relative strength index, it's an internal strength indicator. If it closes below 40 threshold, then suddenly there's potential much lower, and we can show it to this is the next level around 630, possibly all the way down to 537, 550. But if it bounces off, well, then it can bounce back and maybe even resuming uptrend. But for now, I can tell you here, pre-market, when I'm talking, we are actually trading around 705, so it's actually currently below. So let's see where it will end. The 100 moving average coming up here, weekly moving average, will give some support, so maybe we could see a bounce. And then, of course, Tesla. We're going to look at Tesla, of course, for many reasons. But Tesla is also interesting from a technical point of view. Closed here Friday. It didn't make a new low Friday like many of the other US stocks did. Here pre-market, as I speak, we are actually trading around 227. Let's see where we open. There's a little bit time before the market opens. But what is key is if it closes below 212 on the weekly and even on daily, you can see the line here, that is a key support. Well, then we are in for a much rougher ride lower, I believe. It's not a recommendation at all. We could also bounce from the 212, but as you can see, RSI, the strength indicator, is below 40 threshold, meaning we are in a negative sentiment. So it is indicating lower levels. Same here on the daily, as we can see. If it closes lower today, then we have it back below 40 threshold, confirming the negative sentiment. It never got above the 60 threshold, which is key for a bullish trend, and it actually needs to get back above at least 292, at least to go into neutral position. So it looks fairly heavy at the moment, and if it takes out 212 and closes below that, well, then suddenly we can be down here in the region around 150 and 130 level. These lows here in this region, I think this one was around 138.80 and possibly even lower. But let's see when we'll talk about that if we get to that level. Then let's talk about Nvidia, of course. I mean, by market cap, the biggest chip producer, also selling to AI companies and so on. As we speak, we are actually trading around $90 here pre-market. And if it does close below 90.60, well, then it has further confirmed the bearish trend. You can see here, let's remove this one because it's obsolete, but it actually showed divergence, so meaning uptrend was stretched. We are now below the 40 threshold, also on the weekly, on the daily. There's no divergence, meaning that RSI is also at a new low, indicating likely lower levels on Nvidia. And if it closes below 90.70, around 90.60, there will be some support from the 100 moving average here on the weekly chart, but we could see it pushing lower towards 80 and 76 lows area that was back here from April last year. So let's see if it can bounce off and then maybe have a little bit correction, but we are actually in a confirmed downtrend on Nvidia, also dragging also, of course, the other semiconductors with them. So to really reverse this, well, it needs to get back above at least, and let's just adjust this one a little bit, at least up above $123. Then we are actually still in a neutral area, and it will take a bit more to establish a bullish trend. But we could see a short rally if it comes back up there. But again, look out for a bounce here, and then maybe a little bit of a bounce. But I think we'll see another sell-off coming in soon. S&P 500, the broad market, currently here before it actually opens. When I do this video, I know when you're watching it, then market has been open and maybe has been open for a while. But we are actually trading here pre-market around this key support level here at 4,953, just around this. It actually dipped, market actually dipped even lower, but currently we're trading, I think it was almost down to around 4,800. So that was, let me have a look here, 4,800. We've been down to around that level. So we have bounced. We are negative sentiment, negative trends, negative sentiment on daily, bearish trend. Looks really heavy. Today can be a very volatile day on the market. So maybe it can bounce even further if people are going, or investors are coming in, trying to bottom fishing. Be careful of that. But if it starts sliding back lower and closes below 5,000, well, then we could see further trouble ahead. Maybe down to 4,600 even, as it has been a really brutal sell-off. Moving on to gold here at the end, and here we have it. And I'll just zoom out here so it's easier to see what's actually going on. Very short term. We, in early trading this morning, this Monday morning, we actually dipped below 3,000 on gold for the first time in a couple of weeks. It didn't close below, but if it does close below on the daily, below 3,000, well, then there's suddenly a potential down to around 28.80, maybe a 28.35. We have some strong support down here in this region. Here we have the 55 daily moving average coming up, and we have the 100 giving some support there. But if it can stay above, and if it starts moving back above 3,060, maybe it can resume uptrend. And now we are going into the monthly chart just to see what has actually been going on for a very long time. I've been talking about this before. But one thing before we go to the monthly, here's the weekly. We can see that the uptrend is stressed. It is in exhaustive mode. It doesn't mean it can't move higher, because they actually have done that for several weeks. But you can see the RSI values are actually declining, illustrated by the blue line here declining. So that means we are in exhaustion mode. Market is stretched, and we could see a larger correction, but we haven't seen a top reversal pattern yet. Maybe this, it's not a real shooting star, as we call it. The body should be a little bit smaller, but it is still not good for the bulls, to say the least. Looking at the monthly chart, and that will be key to what's going on, we have this, what we call a cup with a handle, and this is the handle where you have correction sideways a little bit lower, and then it took off. And what we do as a technical analyst, we measure the distance from the lowest part of the cup to the brim of the cup here, and then we add it to the breakout price from the brim, basically where it took off, and we can see where it took off, and that was just above 2075 and a bit. And then we project that higher, and we actually reach that. It's not normal we get all that, the entire distance. There's also other ways you can use Fibonacci levels to quantify or estimate where it can move to. So, but it looks like it has actually reached maybe its potential. And also here on the monthly, we also do have divergence on the RSI. You can see the RSI touching or maybe just below the peak here, indicating also exhaustion of the trend. However, if gold pushes above its all-time highs there at 3,168, well, then there's actually potential up to much higher levels towards 3,400, maybe even higher. But let's see when or if that situation occurs. All right, that's all for today. Be careful out there. There's a lot of panic. There's a lot of volatility in the market. Again, be careful of bottom fishing. Suddenly, it could still turn around. But follow me again on Cramer's Corner _TA on YouTube. I do daily videos and sometimes also extra updates. I did it on Magnificent 7 here Friday, looking a little bit further ahead, where I also did some of these indicators I've been talking about, directions and trends that I've been talking about has been mentioned. All right, thank you very much for listening. Have a nice day.